Good morning, I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense and just the right amount of sarcasm by an expert in financial literacy. And hey, that's me, Larry Steinhouse. Today is Thursday, November 17th. I want to welcome you to the show. We are here live on Facebook, Twitter, LinkedIn, and YouTube. For a while on YouTube anyway. And you can also find repeats of the show on Rumble and Spotify. Please search Money Chat Now and Larry Steinhouse, and then you can follow me there as well. And if you'd like to connect, go to contactlarry.com. That's contactlarry.com, and there you'll find my social media connections, my email, and my text message information. That's contactlarry.com. Hey, just a reminder, don't forget to hit the like button, and don't forget to hit the share button. Hey, and also subscribe to the YouTube channel as long as we have one. They're giving me warnings every freaking day now. And like the Money Chat Now page on Facebook, and you can also find Money Chat Now and the Larry Steinhouse Show on Spotify, so please go there and subscribe as well. You can comment live during the show on YouTube, Facebook, LinkedIn, and Twitter, and please say hi so I know you're watching. So if you're watching for the first time, make sure you say hi, and of course if you're a loyal viewer, please say hi as well. If you haven't joined the Money Chat Now page on Facebook, please do that and make sure you can always see the show. And if you're watching on YouTube, please maybe go to Facebook because I have a feeling I'm going to be thrown off of YouTube soon. All right, if you'd like the Money Chat Now page, you can still view the show when I'm in Facebook jail as well because I can transmit there even though I'm in Facebook jail. So please go to Money Chat Now page, like it, and you'll never miss a show due to the Facebook censors. All right, today we'll be discussing the market recap. We're going to be talking about the home remodeling business. We're going to be talking about student loans in Biden and Starbucks strike. The Starbucks strike is just hysterical. Wait till you see this. All right, real quick, I want to say hello to a couple people joining us online right now. It looks like we've got Ken saying hi and Charles saying hi. My wife Linda saying hi. We got Peter saying hi from LinkedIn, and we got Tom saying hi as well. Money Chat Now is brought to you by Investor Schooling. And you can attend a complimentary class this Thursday by going to investorschooling.com. That's today. So today you'll learn about real estate investing and stock options trading from those who do it every day. As a matter of fact, if you come tonight, you're going to learn how to build a list. Money Chat Now is also brought to you by our newest sponsor, PB Adjusting, Public Adjusting Services. If your property has suffered storm damage, water damage, fire, or other loss, you should contact my friend Peter at PB Adjusting. Call him today at 215-388-2056. A public adjuster works for you, not the insurance company. Peter at PB Adjusting will get you all the money you need to rebuild or repair your home after a catastrophe. Call PB Adjusting at 215-388-2056. And don't get jerked around by the insurance companies. Call 215-388-2056. All right, let's get into it. Let's talk about what's going on today. By the way, Peter's watching. I see him watching out there. All right, yesterday was a confusing day for Wall Street. Tuesday, we had Walmart report great earnings, although most of it was due to groceries. Then we had Target report in the morning, and the report was awful. Target reported a decline in sales as families deal with high inflation heading into the biggest shopping season of the year for retailers. So the warning weighed on stocks, sending Target down more than 13% for its worst day since May. Macy's, Nordstrom, Kohl's, and Gap were also down sharply yesterday as well. Target also reported heavy losses due to theft. But that's okay, thieves. The thieves really needed the stuff they stole. Anyway, according to liberals like Bernie Sanders, Gavin Newsom, and our newest idiot, John Fetterman, so Target will just feel better about losing all that money. Of course, people are spending money anyway this season, and as I reported yesterday, they are using credit cards to do so. I have also noticed that credit card usage are suddenly easier, or credit cards actually, I should say, are suddenly easier to get approved for as well. So the beat goes on. Keep lending money, and then eventually they default, and then the banks get bailed out by the government. Sound familiar? Well, Wall Street closed down 39 points, the S&P closed down 33, and the NASDAQ was down 175. This is what I've been expecting as earnings season ends. The next few weeks will be what I call the dead zone, which is basically the period in the middle of earnings reports. Investors get bored, take some gravy off the steak, and stocks go down. It happens almost every time. By the way, Cisco yesterday also reported their earnings after the bell, and the results were pretty good, actually. The stock rose 3.5%, but the stock as a whole is down 27% this year. But then don't forget that the NASDAQ has also dropped down 29%, so it's kind of in line with what's happening across the board. The other big chip maker, NVIDIA, reported as well. Their revenue was higher than expected, but the earnings per share were a bit light. NVIDIA is closely watched by analysts and investors as a leading indicator for the health of the technology industry, and basically it's because it sells chips and software that so many PC makers and cloud providers use. The stock did rise after hours, but did not make up for the day's losses. The stock was as high as $3.46 a share last January, and is now about $160. Yikes! Wow. And of course, Carnival Cruises was down, and it was actually beat up pretty badly yesterday when the company announced that it would offer $1 billion in convertible debt as part of its 2024 refinancing plan. Personally, I think it's a good thing. The company, along with the rest of the cruise industry, was decimated during the great scandemic. They needed money to keep the ships afloat, so they borrowed it from everywhere they could. They sold off more stock and kept the company going. This billion in convertible debt means that they're not going out of business. I think the stock's going to make a great comeback given enough time. It may be 2 years or more, but this stock is going to be back in the 30s again. That would be a nice return considering it's hovering in the 10 range right now. Advanced Auto Parts also tumbled 15.1% after reporting lower than expected quarterly earnings after the bell. And by the way, this was a stock that did very well during the scandemic times and supply chain problems. Once again, the stock, like so many others, has returned to its 2019 price of about $155. I keep telling you about my 2019 theory, and it keeps proving to be true. The stock market and almost all stocks will return to 2019 prices. Most of what I follow, most of what I follow has basically happened the same thing. It's basically proving that. It's like the last 3 years were just a dream, and here we are waking up to the start of the day, and the time is fresh. The only difference, of course, is the dullard in the White House. I know, somehow the nightmare was real. So this market is staying afloat right now, kind of stalling as earnings season ends. However, I believe the market would already been dropping if it wasn't for the optimistic statements coming from the Federal Reserve leaders. We heard from Brainerd a couple of days ago, and she said that she felt inflation was getting under control. This, she implied, would be a lower rate increase in December, most likely a 50 basis point increase, not a 75. Also, Federal Reserve Governor Christopher Waller said that he's open to reducing the level of interest rate increases to half a percentage point, again 50 basis points in December. He made sure he did not commit to that, but the hint was pretty good. The rate setting committee is set to meet December 13th and 14th, and market expectations are running high that the policymakers will approve another rate hike, but this time it will be a 50 basis point increase. So we're basically waiting for that news next month. The next Consumer Price Index report will tell the story. That will happen a couple of weeks before that. We just had a report last week that hit the sweet spot of 7.7% year over year. That's down from 9.1% as a high this year. This week still has a few minor possible surprises. Investors will watch tomorrow for weekly jobless claims. And believe it or not, we want to see an increase in unemployment. Yep, we want to see people unemployed. Yeah, stupid, right? But that's the way it is. That will show that the economy and inflation are slowing. We will also see the latest reports on October housing starts and building permits and manufacturing surveys from the Philadelphia and the Kansas City Federal Reserve banks. All right. We also have some earnings reports today from retailers, including Macy's, Kohl's. Actually, Macy's reported, and they reported pretty well, and the Gap after the bell, but that's it. This is the end of the major earnings, and next week we start to enter the dead zone. All right, let's take a look at the futures, and let's see what Wall Street is trying to tell us right now. Right now, the Dow is down 232. So real quick, I noticed something interesting. The Dow, first of all, the Dow was up about 100 points in the futures at about 3 o'clock in the morning. That's when I get in the office and start doing this stuff, right? Then I noticed that, it was starting to drift down. It was down like 50 points, nothing big. Then all of a sudden, a report came out about the UK claiming they're in a recession. And boom, the futures just dropped. So I bet you it's going to be a rough day today. All right, so anyway, the Dow is down 233 right now. The S&P is down 30. The NASDAQ is down 86, and I expect it to be bad today. All right, let's talk about this. You guys always want to know what the next big thing is, what you should invest your time, money, and business in. Well, I'm going to tell you what it is. The next serious boom is here, and I'm telling you, you want to be ready for it. I'm expecting the home remodeling business to boom in the next 3 to 5 years. Let me explain why and what's going on. We've been here before. When housing prices drop, people stay in their homes. When interest rates rise to make it difficult to buy a new home, people stay in their homes. When people are scared of the economy and scared to move, people stay in their homes. So this is just part of the reason why the home improvement industry is gonna rock. Hey, if you're living in your home and your bathroom or kitchen is old, it'll cost you about $8,000 to $15,000 to remodel the kitchen for a modest home, and about $3,000 to $6,000 to remodel a bathroom in the same modest home. If you're staying because you need to or you're scared, remodeling the home is cheaper and faster to get the little things in your home that need to make it more enjoyable. The other reason remodeling will be the answer is because most people have an enormous amount of equity in their homes right now. Typically, a homeowner can refinance their home or get an equity loan with all debts on the home equaling no more than 80% of the value of the home. Sometimes it's 90% depending on the bank. But it's estimated that equity in people's homes grew by an unprecedented $1.2 trillion in the first quarter of the year alone. So basically, they're estimating that per homeowner, they have roughly $207,000 in tappable equity. This is a lot of money to spend on home repairs. Check it out. A recent survey of nearly 4,000 homeowners by House, a home improvement and design website, found that only 1% of homeowners reported having canceled a home improvement project in 2022. Meanwhile, 37% of homeowners completed a project in 2022, and nearly one quarter said they were planning to start a home improvement project the next 12 months. The survey results also added this. More than half of the homeowners have no intention of selling or moving out of their current residences for the next 20 years or ever. That's kind of optimistic or maybe even pessimistic view to say they won't move for 20 years, but it's the view of most homeowners. If you're looking for a business that will rocket into the next 5 years, get out your tool belt and hang a shingle on a home as a home remodeler. Ride the wave, and during that time buy distressed properties and then renovate them at the same time. The next 5 years are going to be real estate investors' best 5 years of the decade. All right, let's take a break here. We'll talk to you guys in a minute. Hi, I'm Larry Steinhouse, and one of the most misunderstood things in America is money. That's why I've written this book. It's called Money Hacks, because everything you think you know about money is wrong. And I'm telling you, everything you think you know about money is wrong. When you read this book, you will learn things about money that you did not know. You will even learn if money can buy you happiness. I have a full chapter dedicated to that. You're going to definitely want to read that. I talk about how to use other people's money to buy real estate. I talk about how to save more money, and I even talk about how to rebuild your credit score in this book. There are 22 amazing chapters in this book. This book is now available everywhere. It's available on Amazon. It's available on barnesandnoble.com. And you can order this book right now, and you'll have it in 2 days, and you'll start learning things about money that you never knew before. So order the book right now. Go to Amazon, go to barnesandnoble.com, and order the book, Money Hacks by Larry Steinhouse. All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on investor schooling, you can go to Investor Schooling or call 866-424-2829. That's 866-424-2829. I think my commercials were in the wrong order. Anyway, it doesn't really matter to me. All right, I want to welcome you back to the show. We are here live on Facebook, Twitter, LinkedIn, and YouTube. And you can also find repeats of the show on Rumble and Spotify. Please search Money Chat Now and Larry Steinhouse on Spotify. Like and subscribe there as well. And if you'd like to connect to me, go to contactlarry.com. That's contactlarry.com. And there you'll find my social media connections, my email, and my text message information. And that's it. It's contactlarry.com. Okay, real quick, I want to say hello to a whole bunch of people who joined us online. I was running through, so real quick. So we got, let's start from the beginning. We got Ken and Charles, my wife Linda. And we got Peter and Tom and Joe. Joe's in the home improvement business. He's going to make a fortune. We got Mike, and we got Glenn, and we got Sandra saying hi. We got Dave saying hi, Rob, Tommy, and Michael, and Karen saying hi. Thanks, Karen. We got Seth saying hi. Oh, Karen, by the way, the next thing I talk about is not referring to you. You'll understand in a minute. We got Dan saying hi. Hey, Dan, how are you? And, of course, Ken reminding us that I will be in the Temperance House today at 12 o'clock. We'll talk about that as well. We got my brother Seth saying hi. He said you nailed it. That's pretty funny. We got Mick saying hi and Liz saying hi. All right. We got, let's get into the next topic real quick because I am running out of time. But we got student loans coming up. We got Biden coming up. And we got Starbucks strikes. And then, of course, we have today's picks and plays. But did you guys hit that like button? Hey, everybody, hit that like button and hit the share button. I'm going to have a little bit of fun in the next two topics. So leave me a comment and say hi if you haven't already. Again, leaving a comment is the only way that I know you're watching. And like I said before, we're meeting today at the Temperance House for lunch and networking. Come have lunch and bring lots of business cards. The luncheon meeting is $25 for cash or check. That's at the Temperance House at 12 o'clock. I hope to see you there. All right, let's talk about student loans. Well, the student loan drama continues as millions are about to start paying their student loan payments that they did not need to pay since the beginning of the scamdemic in 2020. By the way, I got to tell you something funny. I've written the word scamdemic so many times in my word processor that it no longer highlights it as a spelling error. I love it. Anyway, the moratorium on the payments is ending, so the loans will now need to be paid. If you recall, the great dictator Biden decided to randomly forgive all student loans up to $10,000 and $20,000 if the loans were originated by low-income borrowers using something called a Pell Grant. By the way, the Pell Grant, if you don't know, it gives low-income borrowers more leverage to borrow and gives them a lower cost to attend college. But now the great dictator has been reminded of something called the U.S. Constitution. It's in this great document, the one that most forgot about in the last 3 years, it says that the president cannot make a unilateral decision, like forgiving college loans. It says that this has to be an act of Congress with a majority vote. So the great dictator, who announced this unilateral benefit without the approval of Congress, right before the midterms elections to look good, is looking like the fool he really is. So what does he do next? Well, just like all the so-called Karens of the world, he basically is yelling at the manager. His administration is screaming with filings in court that say, unless the Education Department is allowed to provide debt relief, we anticipate there could be a historically large increase in the amount of federal student loan delinquency and defaults as a result of the COVID-19 pandemic. Yep, this is their retort to, this is unconstitutional and Biden can't do it. Just yell and say you have to do it because I said so. First of all, why not just bring it up to Congress? Why not do it the legal way? Oh, are you afraid you have no influence over the House and Senate anymore? Well, you better move fast because the House was just taken over by Republicans. Maybe, Dictator Biden, you should have checked with legal counsel before promising the loan forgiveness in the first place. Now, actually, maybe you did check and decided that even if you knew it would be defeated, you might save your party and help get more brain-dead government like Fetterman elected. By the way, how did that happen? Holy crap. But getting back to the student loans. Do you know what the next move for Biden is, don't you, right? He's going to blame the Republicans for this. Not just the Republicans, of course, but the MAGA Republicans. Those conspiracy theorists who believe the United States Constitution is real and still governs this land. The extremists like you and I who believe in it. I wonder if the Founding Fathers thought this would last this long, and I wonder if they thought we, the constitutionalists, would still be treasonous in the eyes of the leaders in the future. The battle just continues. Well, as an update, the student loan forgiveness portal has been closed. That means no one can apply for it any longer and will probably means that it will not happen. But don't worry, Biden and his Inflation Reduction Act will save you from yourself. Another big joke by the administration. Too bad I can't talk about how they got elected. Do you know that YouTube has sent me multiple warnings now? Yep, it looks like the words election and anything else that has to do after that word will make me blocked, banned, and removed. So from now on, I will refer to it as selection. Screw you, YouTube. Seriously. All right, a couple people real quick. I just want to see there's a whole lot of chatter going on. Nobody else knew, but there's a whole lot of chatter. I can't get all the chatter out. Let's talk about Starbucks. Oh, my goodness. Hey, did I mention the Karens of the world in the last segment? Oh, boy. Wait till you hear about the Karens who work for Starbucks. Unfreaking believable. First of all, a little bit of background about Starbucks. To celebrate the holiday season, Starbucks each year gives away a reusable red cup bearing the company's logo with any purchase. The giveaway is a Starbucks tradition. Many people collect these cups, and, basically the coffee's Red Chain Cup Day has become a must-do day for these collectors. This year's event marks the 25th anniversary. By the way, I had no idea they did this. That just goes to show you how much of a Starbucks fan I am. But anyway, they've been doing this for 25 years. So for all you people collecting the cups, I may have bad news for you as the Starbucks unions plan to disrupt this year's Red Cup Day. You may not know this, but in the past 2 years, 113 Starbucks locations have actually voted yes for less pay and less power to negotiate. I mean, they voted to unionize and be led by a leader who gets paid from the dues extorted from the workers who voted to have this happen. Wait, I mean, unions standing up and stealing from the little guy. Damn, no matter how much I try to say something nice about unions, I just can't. So anyway, the Karens of these 113 stores have decided to strike on Red Cup Day. Now check this out. This is their move. The organizers at 113 striking locations are planning to protest and distribute a version of the Red Cup featuring the Grinch hand holding an ornament with the logo of the Starbucks union. Yup. They made their own cups. Now think about this. If the union is striking for more wages, why doesn't the union just give the cost of the cups back to the workers as a bonus? Oh, I know why. It's because they don't care about the workers. They only care about the unions making money and the political advantage. Oh, wait, I'm sorry. There I go again. I just can't seem to say anything nice about unions. Ay. All right. Now think about this. They're going to sneak these cups in, and the workers are going to be grinning as they give them away. Look, you got the wrong cup. If Starbucks doesn't fire the workers for using the cups, well, they're basically condoning their behavior, so they deserve to be made fun of. But think about this. If you really are a collector of the red cup, wouldn't you want this Starbucks Union Special Edition cup to add to your collection? Of course you would. So, as these dumbasses hand out the cup to risk their job, Starbucks gets more customers that day anyway. I think the workers who voted for unions in these Starbucks locations should definitely have all their student loan debt wiped out. Clearly, they got no education. All right, let's take a break here, and when we come back, we'll discuss the picks and the plays.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock options sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. Hey, do you guys know we have a Spotify channel? That's right, you can go there now and subscribe to the Money Chat Now Spotify channel and the Larry Steinhouse Show Spotify channel as well. There's a difference between the two channels. The Money Chat Now has these stories broken out, and the Larry Steinhouse Show has the interviews. That's right, you can subscribe to the channel and listen to all the reports, and they're broken out, so enjoy it, right? Look up Money Chat Now on Spotify and subscribe. And also remember that my interviews are continuing. So if you have a business or if someone you know would benefit from being interviewed by me, please reach out at contactlarry.com. That's contactlarry.com, or hit me up in the messenger. The interviews, they're fun, they're informative, and they're a great publicity for their business. And right now, they're still free. Hey, we're also looking for more sponsors of the show. You heard our new sponsor, PB Adjusting. Fantastic. And if you'd like, you could be a sponsor on this show and the Saturday afternoon show on WPHD Radio. Our sponsor program includes spots here and there as well. Please reach out and let me know if you'd like more information on sponsorship. And you can reach out at contactlarry.com, or just reach out on Messenger. That's fine. It's simple over there. All right, so far we've been discussing, of course, the market recap. We've been talking about home remodeling, and I'm telling you, this is the business to be in. If you want to get into a good business, get into home remodeling business. This is the business that's going to carry you for the next 5 years. And if you're really good at it and you got a good crew, you're going to kill it. We talked about student loans and Biden, and how Biden, the dictator, decided to not read the Constitution before he decided to make a mandate or whatever you want to call it. And then Starbucks strike, of course. And I actually got to find a Starbucks location that's striking, because I want one of those cups just to put it on my desk. I think it'd be awesome. All right, and coming up, of course, we have today's picks and plays. But did you guys hit that like button yet? Did you guys hit that share button? Tell all your friends about the show. Let them know it's both entertaining and educational. And please share it on your page or in groups that you feel will also enjoy the show. I just realized something else. Starbucks is getting all this publicity for this too. Wow, these guys are really dumb. That's a strike. Give the company you work for that you don't like more money. Yeah, that makes sense. Okay. All right, let's get into it today, and let me tell you a little bit about my prediction. Look, here it comes, folks. Earnings season is pretty much ending today and tomorrow, and then we're done for a while. Lots of good news kept the market moving up the past few weeks, but that's all a memory now. Hey, look, I wouldn't be surprised if we start to see investors pulling out large chunks starting today. If that happens, well, it could be a 300 to 500 point drop in the Dow. I have some Apple stock. I actually have some puts, and I'm waiting for that to make me some money as well. My CCL is still holding, and if it drops below 9, it is a serious buy. So if this stock drops below 9, buy more, and buy more, and buy more. Just be prepared to hold it. Meta also will drop. I actually tried to buy puts on it yesterday, but it moved down too fast for me to get into a good price. I'm also looking at Tesla as a put play as well. The Musk and Twitter saga will spook investors in the near future, and the investors will feel that Musk is basically putting Tesla in jeopardy. Watch this; it's definitely going to happen. Watch, there'll be a report on this, and but then again, maybe with his rockets, he'll be able to go back to his home planet soon, and that will also make the stock drop. Joking, not joking. Joking? Well, maybe, I don't know. So watch the market drop and play it well. Covered calls or puts are the play into mid-December. And let's take a last look at the futures. Let's see what's going on right now. We got the Dow is down 237. We got the S&P down 32, and the Nasdaq is down 97. It's going to get worse. All right, let's talk about crypto. Crypto is a mess. I know, with all the bad press and money being stolen and lost, and people that are losing money and losing faith each day, the values are starting to show it. Bitcoin is now just a touch over 16,000. And if you remember 6 months ago when it was around 20,000, I said it was headed for 12,000, and then it will head for 7,000. Looks like my prediction is correct. Ethereum is about 1,200 right now, and I believe it's going to be below 700 in a very short time. Look, if you're in them, I feel sorry for you, but it ain't coming back this time. I'm telling you now, it is not coming back this time. Do not be here anymore. Go away, crypto. All right, let's talk about gold and silver. Both gold and silver moved down a bit yesterday. Gold is now 1767, and silver is just above 21. And then, of course, we have the Treasury bond, and the Treasury bond is moving down, and mortgage rates are moving down too. Hey, I want to remind everybody to be at the Temperance House today in Newtown at 12 o'clock. We're going to have lunch here. It's going to be a blast. And don't forget, we're going to have some fun. It'll be $25 for the lunch and $25 for the meeting. I'll see you there at 12 o'clock today, and make it a profitable day.